Right, so in reviewing the Japanese yen short position, let's talk a little bit about position sizing. The initial signal hit right here at the 117 sell where we had a pattern completion. Market pulled back into the 618 retracement of the C to D leg, which was the profit target. So we'll take the swing low at C to the high at D where the market completed the pattern. And you'll see here that 115.31 was the initial target for approximately 150 to 60 pips. Okay, consider bid-ask spread. Now, since that time, we've continued south. We've broken the previous swing. So as the market rallied into the short position, we made higher highs and higher lows. There was the sell, followed by the higher low. This outside return right here came into the 618.786. So we'll take the swing low to that structure. And again, you'll see we rallied back into 618.786 of this market move. Now, once we've broken structure and made these new lows, the scalping contract's been taken out. So now consider your position sizing model. Okay, outside return, there's a new structure low. Here's a retrace. We could get extend and then project for another short entry here in the Japanese yen. So with an additional sell signal that sets up based on the patterns, again, this is all a pattern trade, opportunity to add the scalper back into the market short. Okay, that would be the scalper add-on, and then the profit target would be, again, 618 retracement of the C to D leg. Now, obviously, if this trade continues in the direction, I'm going to copy and paste this move, and right there is where our ABCD would press back down into the structure support, which was our swing low at A. So this is what we use to identify the initial short position. Okay, so a 1-to-1 measured move presses the 112s, which from our current trade right here at about 115 is another 300 pips of opportunity. Now we're on a 120-minute time frame, so let's take it down now to the hourly. Okay, as you look left, I had a question regarding the X to A leg. Here's the swing low. Look left, there's the swing high prior to. And you'll see the difference in those two, literally, if we crop this wick, is about 10 pips. Okay, so it's not going to be that significant a difference from either one of those. This is approximately 1670 to 80. This is 1685 right here. Okay, cropping that wick. All right, so now let's look at where this could possibly move back into. And this will also give you an opportunity for trail stops. You'll see right here that a 786 retracement, 116.12. So stops above that at 116.35 would be around the 886 retracement of the new potential. Okay. The new potential sell pattern. Okay, that's just great. All right, so outside return. Now let's look at the pullback. Okay, now consider, currently short half of the original position, the trading contract portion. So right now we've got the A to B leg. Now what if you're an aggressive buyer at C? Okay, you'd look at this and say, okay, if I buy one at 14.10, then you basically would be covering your short position from the previous short entry. Okay? So you would buy the scalper right here as part of the aggressive buy signal on the hourly time frame, which would get you short from the 117. So that would be approximately 290 pips of profit on that second signal. If the market rallies and moves into a 1-to-1 measured move at the profit target, then let's call it a 115.50 sell. So you would pick up another 140 pips. And then as your limit order gets hit right here, to cover for profit, that short entry would put you back net short your previous trading contract position. And you'd pick up another 140 or 150 pips here, and then be back net short and have to place your stops accordingly. Now, let's look at the other side of that. If you buy here, you take your 300 pips or 270 of profit, and then if the market rolls lower and takes out your protective stop on that aggressive bid, right here as an example, you now go from long one to You get stopped out of this, and remember, that puts you back into your short position. And then that, again, would be targeting the 112 region. Okay, so we talked last week in the mentoring program about position sizing and about using those stop and reverses. So here again is a pattern trade. We have two different. We have the aggressive signal right here that is counter to the current underlying position, which is a net short position. Okay, so buying right here would get you flat, and then as the market rallies back into this area, if you cover right there what would be your profit target, that would get you back net short. Or buying right here would get you flat, and then if the protective stop was hit, that would get you again net short. Or you only take trades in the direction of the trend. Okay, so in other words, right here was the pattern completion on the sell side. So you're net short right here, and then this would be an opportunity on any additional sell patterns to add the scalper back into that net short position. And then again, use your rules of engagement for your scalping contract profit target right there in that Japanese yen. Okay, so we'll continue to track that on the yen, but I wanted to go through that because we could have another sell signal that would be the opportunity to add on to the scalper. Now, last thing to consider, if short, then where is your protective stop for the balance of your trading position? If your stop right now is above this swing high that we discussed yesterday, then there's a chance that if the market rallies into that 618 and gives you the short signal and then moves slightly through it, your trading contract trail stop would be taken out from the original position. But you would get back net short, again, based on what? A qualified trading signal that's consistent with your current underlying short position. And again, both of them pattern trades, both of them in the Japanese yen market, one of them based on the 4-hour completion. This one would be an add-on based on a shorter time frame in the hourly pattern.